May profits be upon you. Welcome to another weekly market forecast. We're looking at the Euro USD, the Euro USD. If you haven't already checked it out, please go back and check out the video analysis I did for the US dollar index. All right. And you'll see that I gave a lot of information on there to help you make informed decisions about making trades with your major FX pairs, to include the Euro USD. Now, go check that out now. Now, on the Euro USD, we're looking at the weekly time frame, and you can see all we have to do is squeeze it up a little bit. You can see we've been bearish since 2008, right? Look at that high, and we've been making lower highs since, right? Just a big old sweep down. It's really a descending channel, right? But it's not the cleanest channel because it looks like we had a break there, right? A break up there. But it depends on how you want to mark it, really. All right. We don't do a lot of, excuse me, we don't do a lot of support and resistance trading over here. All right. We are smart money traders. And just because there's a trend line doesn't mean, hey, we got to start taking shorts from here and we got to start taking longs from here. No, that's not the way we work. All right. We're looking for PD arrays like order blocks and fair value gaps, lows and highs, old lows, old highs. And, there's things that we look for in price to give us clues, right? Now, but let me get back to the point. Euro USD is showing weakness, right? Over the long haul, the macro view of it. Okay. But since 2025 opened in January, it's been bullish, right? In a shorter term time frame, in a shorter term type of way, as opposed to the macro view, we are short term, we are bullish. But what are we bullish for? We always have to ask that question. Why are we bearish or why are we bullish? Well, this is the high and this is the low of this trading range. Everything that's happening in between that high and low is internal structure. All right. These highs here, these highs are internal highs. When we break those internal highs, that's when we say, hey, the pullback might be over or the pullback might be continuing. All right. And that's the way you have to look at it. And you have to look with your Fibonacci retracement tool when you have a range and you want to measure the pullback. This is the pullback to this impulsive move. Impulse correction for the next potential impulse. That's how a lower high, a lower high, a lower low, a lower low, lower high, lower low, lower high works. That's how it works. You understand? So, what are we looking at here? OTE levels between 618 and 786. 705 to be included. This is the OTE levels, and that's where price is right now. We just so happen to be on a downward trend line, and price is hitting that trend line as a form of horizontal resistance. All right. Doesn't, like I said, it doesn't mean that we start taking shorts from here as soon as it hits that. No, that's not the way we work here. But we note how the structure is forming. You understand? Good. All right. So all of this is part of this pullback, the correction to that impulsive move, and the way we see a trade form is when this either breaks or we break that high. Once we break that high, we're no longer bearish because this, if you have any trouble understanding what bearishness is, when you don't break a high from 2008 and this is 2026, all right, we're bearish. All right, we're bearish. All right, and we have been bearish for years. All right, even though we've had corrections to these impulses, we haven't broken a high. All right, that means we're just still bearish in the macro view of it. All right, now when would we know that this pullback is over? When we see a bearish move like that, when we see sh- internal lows getting taken out, that would be our first clue as the market has changed character, a change of character, right? And if in this instance, we can get rid of this now. In this instance, I wouldn't consider taking shorts. I would not consider taking shorts as a swing trader until it breaks this low. I like that low. This is an important low here. This is an important low here, but this is what would tell me, for me, uh, that the market is giving us this would be a break of structure. For me, this is a change in the state of delivery. All right. Change the state of delivery here. This low. This low. Yeah, I see price close below that low. It would confirm that the market has shifted from a bullish one to a bearish one. I hope you caught all of that. Good. Now, also, I want you to make note of something. See that how the market closed last week? It closed bearish. It closed bearish after a bullish close to the previous week, making a high here for the month of February. Uh, uh, we had a strong bearish move to the downside into the fair value gap, here. Let me mark that fair value gap for you because that's what I do here. I do things for you. All right. So that is at um this is the fair value gap that we're looking at. Prices falling back into it. We did not go higher. We did go higher, but didn't see the follow through, and it closed. This candle closed back within the range of the previous candle. That usually means consolidation. The last week's candle closed below that low in a strong way, took the sell side liquidity of this consolidation here, and uh, you see the market pull back up. Now, are we going to see the market continue down, or are we going to see the market pull back up and head towards a high, or stay in this consolidation? That's a good question, but we are in a bullish fair value gap. I don't know why that is bearish. Sorry. All right. We are in a bullish fair value gap. All right. Notwithstanding, not counting that one. All right. We're going down lower to see. All right. So we should, I had a bullish attitude, if you will. My mindset was that we may see some follow through, but if we wanted to see the market continue bullish, it should not. It should be a close. I had it marked. I mentioned it 2 weeks ago. Uh, if the market closes above that high, then we're going to see more bullish. But if the market continues to respect the 50% of that wick, we're going to see this low. And I'm looking for it to give me, to reach down to this low right here, like I mentioned earlier. All right. If we take out the fair value gap here, if the market closes below that fair value gap, that is a bearish indication, folks. And I would be looking for a price to pull back so I can take a trade to the downside. I'd look on a lower time frame, but that's a whole different conversation. You got where I'm at on this. Excuse me. Now we're going to the daily. What do I want to see? Like I said, I want to see this low get taken before I start to considering long term, uh, longer term sells. All right, this would confirm anything that happens here. This low being taken out is just that would confirm the move, the bearish bias from here that I'll get from here. All right, this consolidation here is really down to here. A close below this low after it made this high. This is a internal high. It kept that low protected, and then we moved up higher. So what do we have here? Higher high, higher low, higher high, higher low. higher high. If we take out this and make a lower low, that'll give me my sell model. Do you do you get it? Can you dig that? All right. All right, that'll give me my first hint that the market is turning bearish. This will be the low that that was in before this high. That'll give me my confirmation. All right, I'm not going to repeat that again. Okay, so what do we have here now? Like I showed you on the daily of the U.S. dollar index, there is a bearish fair value gap that was over a bullish fair value gap that was overtaken here. All right. Once this candle closed below it, it disrespected that bullish fair value gap and inverted it. All right. What I'm looking for is the market to push back up and use that inverted fair value gap to take short-term lows toward short-term shorts, sells to here. I want to see a sell model form here in order to take price down to this. Now, this is an order block here. Why am I emphasizing on this order block? Didn't we already tap it here? Didn't we already tap it here? No, no, we didn't. Let's take a closer look with this magic box. See, about a tick or two from it with that low. So I have this as a liquidity point that is drawing price, and there's another one. There's another one down lower here. I believe this is going to draw price into this order block. Does that make sense to you? So if the market opens up and we start moving bullishly, I wouldn't be on the bullish train. I would not be taking buys because it's going to run into a headwind here. That is a inverted fair value gap, and I'm looking for the market to reach up there. Excuse me, to reach up there and give a sell model down to the order block. This is a short-term play here, folks. All right, it's not long-term. I would take it down to here and see how the market reacts once it gets to this order block. If the market breaks through that order block, we're heading down to here, and that is interesting territory. Now, there is another area, the final uh, line of defense for the buyers. For buyers, let me see. Boom, right, right here. You see the sell candles before the stronger buy, and you see what the market did from there. That's why it's important that if the market takes that low out, that is a protected low. If it takes that low out, we're heading towards the swing low over here. Okay, so I'm really, I'm taking a sell model from up here down to this order block here. I think that is a fair thing to look for. Just if the sell model does not form here, folks, then there's no sell to take. And if it continues up higher from here, then and disrespects this inverted fair value gap, then you look for your buy models once it pulls back, and then we can take it up higher. That's all. That's all there is to it. That taking out this inverted fair value gap here would be a bullish indication. This high, I'm not going to be looking for buys up here myself. I'm not going to be looking for buys up here myself until that high is tapped. I'm not going to do it. I want to see some confirmations when we get past. Remember this red dotted line is that if we get a close past that, that's when I would start thinking about buys. But until that happens, that's that wick from the weekly time frame. All right, until we get a close past that, I'm not going to be looking for longs yet. All right, I would definitely be looking for the buy model. Sorry, if I can get this. Yeah. I don't know what's happening here. Yeah. If the buy model shows up here, once we sweep, once we sweep, I'm not sure what's going on here. Once we get the sweep here, and once we, I don't, I'm really having trouble with this. I don't know why. I don't know why it's acting all crazy. All right. Once we get the sweep of this low and this low, that would prove to be pretty pivotal because that's a sell side liquidity, and I would be looking for a buy model once we come into this vicinity. All right. If the price continues down, then I'll be looking for that buy model to hit here. Is it possible that the market could come start to turn bullish down here? Certainly it could. It most definitely could. But you know, we're going to take it as it comes. I'm not going to be taking what do you call wild swings at the fence. I'm not looking for grand slam home runs. No, 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 no. I am not. So, you know, we're going to take it as it comes. Okay, that's what we're going to do. All right. So, I wanted to show you something. Look at this on the 4 hour. When the market opens, you see this eye here? It's looking at this bearish, it's an inverted fair value gap. Why is it inverted? Because there was a bearish fair value gap here. Price respected it, did not take out the low. All right. It respected it, but it didn't take out the low, showed no momentum to the downside, and we're back up in it right now. Yes, it's you see these long wicks of rejection there, but uh, will those rejections hold? Is the question, or are we going to close above these highs? All right, if the market takes that bearish fair value gap and inverts it, we're going to bring it. We're going to bring it out to here. And if the market gets above it, I'd be looking for a price to come back to it to push higher. Now, if you want to, you can get on this. You can take buys here. You can take buys here and take it up to this inverted fair value gap up here. Right? It's untouched. This is where I'll be looking for my sell model. I think the sell model is a better trade than taking this buy model up to it. But yeah, if you're a scalper, or if you want to work on the 1 minute and 5 minute time frames, hey, you can do that. You know, I think for the highest probability setup here, this is the one that I would like to take down to this. Sorry, to this. The the sell to buy here. That's what I want to do. That's what I would prefer to do. I'm not sure what's going on here. All right. Just all right. So that's it. That is it. All right. So I have some you might see a short-term buy here, but it's the sell that I want. The sell would be higher probability in my opinion. Okay. And we take it down to this this order block here, this bullish order block here. All right. Remember, see these blue lines. Remember, we are in a bullish fair value gap. Remember that I had marked out on the weekly, I believe it was. Yeah, it was the weekly. And it looks like the market is diving into it. All right. We're past the first quad of it. We're going down to the consummate encroachment, aren't we? We're at the halfway point of this weekly bullish fair value gap. We get a close below last week's candle, weekly candle. Yeah, I'm going to expect that. I'm going to expect the market to continue down, but after a small pullback, quite possibly, just like I had showed you the opposite on the the, the US dollar index. I'm looking for the market to hit here, to tap this low. There's no wick here, remember? Just comes up. Then we have this bearish move. All right. For last week, I'm looking for that bearish move to wick up and then continue down lower. All right. And we may wick right up. I'm going to mark it. I'm going to mark it. We may wick right up to here. And that happens to be, ooh, that we're overlapping something here. Yep. We are overlapping the highs of these two doji candles. All right. This was Friday and Thursday's candles. A sweep of this, the buy side liquidity above them into this order block, the buy up before the strongest sell off. All right. This is where I would want to see the market go, so we can get that sell model here. All right. That's enough. I will see you in the next video. Thank you for watching. May profits be upon you.